Hi, hello, welcome you all to yet another video of my channel. And today I'm going to explain a video on cash budget, a problem with all adjustment. So previously I have uploaded two related video on this topic. One video about the basic of cash budget and one video exclusively about how to deal with cash budget adjustment. If you are new to this channel and you're seeing this video first, I kindly advise you to see the other two videos so that you have a basic knowledge about the topic. But if you already have a basic knowledge and you just want to know how to work out a problem, you can continue with this video. So let us get into the video. So as I told you in this video, I'm going to explain you a full problem with adjustment. So this is the problem. A company expects to have rupees 25,000 in bank on 1/5/2013 and requires you to prepare an estimate of cash position during the 3 months May, June and July 2013. The following information is supplied and you have information on sales, purchase, wages, office expenses, factory expenses and selling expenses, right? So we are required to prepare a cash budget for the month of May, June and July 2013, and the opening balance we have in our hand is rupees 25,000, right? And we have information on sales, purchase, wages, office expenses, factory expenses, selling expenses, out of which sales is the only receipt. Purchases, wages, office expenses, factory expenses and selling expenses are all payments. And let us see what are the additional other information. 20% of sales are in cash. Remaining amount is collected in the month following that of sales. Suppliers supply goods at 2 months credit. Wages and all other expenses are paid in the month following the one in which they are incurred. The company pays dividend to shareholders and bonus to workers of rupees 10,000 and rupees 15,000 respectively in the month of May. So this is what we call it as special entry, right? You have a special entry in this problem. Plant has been ordered and is expected to be received in June. It will cost rupees 80,000 to be paid in June. This is another one special in entry. Income tax of rupees 5,000 is payable in July. One more special entry. Right. Let us get into the problem. So as you know, this is how the format of the cash budget appears. So the title cash budget from the month of May 2013 to July 2013. So we are going to prepare for the month May, June, July. So what will be the first entry? As I told you, opening balance. So we have seen in the problem the opening balance is rupees 25,000. So followed by opening balance, what you have to make? You have to make entry on receipt. That is, you have to add the receipts to opening balance, right? What is the receipt? So as we have seen in the question, the only receipt available is sales. So let us first do the working notes for sales. So what is given? 20% of sales are in cash. Remaining amount is collected in the month following that of the sales, right? What does it means? It means that 20%, that is, for example, of this 50,000, what is 20% is 10,000. 10,000 I am receiving in this month itself. The remaining amount I am receiving in the following month. So what I will be receiving in a particular month. So we are preparing for the month May, June and July, right? So what I will be receiving. So we have to start the calculation 1 month again. The April sales. So first we will do the calculation for the April month. The sales, April sales is 56,000. So first we will calculate 20% of the April sales, that is rupees 56,000, which is rupees 11,200. So that we will make an entry in April itself. Next, 80% is, that is, if 20 is cash means then 80 is credit. 80% of 56,000 is 44,800. That 44,800 we will enter in, right? We will enter it in the month of May, right? So similarly, we will work out for the other four. See, May, the sales is rupees 60,000. 20% of 60,000 is 12,000, which we entered in May, and 80% of 60,000 is 48,000, which we have entered in June, right? So work out for June. June sales is how much? 80,000. So 80,000, 20% is 16,000, and 80,000, 80% is 64,000, right? The calculation for the month of July, which is 90,000, and 20% of 19,000 is 18,000, and calculation for the month of 80% credit sale calculation is rupees 72,000. So now we have finished individual calculation for all the month, that is first 20% in that month and the remaining on the following month, 20% in that month and the remaining on the following month. Now we are going to prepare cash budget for May, June and July. So it's enough that we do the addition for these 3 months. So 44,800 plus 12,000 is 56,800. Next 64,000 and 82,000, right? So now we are going to carry forward this to the format 56,800, 64,000 and 82,000. 56,800, 64,000 and 82,000. Now what we have to do, we have to calculate the total receipt. As I have told you already, when you calculate the total receipt, you have to calculate the total receipt for the first month alone. Because why you cannot calculate the total receipt for the other month? Because you are yet to know about the opening balance. Only when you complete all the calculation for the first month, you come to know the closing balance of the first month. The closing balance of the first month will be the opening balance for the second month. So first we will calculate the total receipt for the month of May. That is 25,000 plus 56,800, which is 81,800. So after calculating total receipt, what is the next step is less payments. So less payment, the default payment entry is purchase. So let us start with purchases. So we'll do purchases. What is given information for purchases is supplier supply goods at 2 months credit. Okay, they supply for 2 months credit. 2 months credit, what is mean by 2 months credit? For example, if I purchase something on March, that I will pay 1 month April, 2 month May. Only by May I will pay what I have purchased on March. So in May we are doing calculation for which 3 months? May, June and July. So let us see in May what I will pay. I will pay the amount 2 months before amount, that is rupees 30,000. So similarly what will be my entry? 30,000, 32,000 and 35,000. Let us make an entry there, 30, 32 and 30,000, 32,000 and 35,000. Okay, now let us see the other payment. Wages and all other expenses are paid in the month following the one in which they are incurred. So wages, office expenses, factory expenses, selling expenses are paid in the month following the one in which they are incurred. So what it means, if expenses is incurred on March, that is paid on April. So in what we will pay on May, right? In May we will pay the expenses we have incurred on April. So we'll pay 6,500 for wages, 4,500 for office expenses and 5,500 for selling expenses and 3,000 for factory expenses and 3,000 for selling expenses. So we will carry forward this 3 values. I'm just carry forward. So for wages, so just I'm carry forwarding this value, right? No more calculation. That's why I'm going a bit fast. Okay. Now we'll go with the other information. So this is the entire other information given in the problem. 20% of sales is cash. This is over. Supplier supply goods at 2 months credit. This is over. Wages and all the other expenses. This is over. Now what is the next entry? The company's, this 3 entries is pending. This 3 entry is what we call it as specific entries. Specific entry means those entry will appear only in the specified month. It won't, and for the other months we will just put a dash, right? The company pays dividend to shareholders and bonus to workers of rupees 10,000 and 15,000 respectively in the month of May. So this entry is only for the month of May. So first, dividend to shareholders, May month rupees 10,000, bonus to workers, May month rupees 15,000. Okay, so now this entry is over. What is the next entry? Plant has been ordered and is expected to be received in June. Okay, plant has been ordered and it will be expected to receive in June. It will cost rupees 8,000 to be paid in June. So we have ordered a plant that we will receive in June, and you have to pay it in June. What is the cost? It is rupees 80,000. So payment for plant, this entry will go on the month June, 80,000. Again, this is also over. The only thing left is income tax, rupees 5,000 is payable in July. So payment of income tax, July 5,000. So now we will make the total payments. So when you calculate total payments, so simultaneously you can calculate all the 3 months total payments, because neither the opening balance or nor the closing balance is going to affect the total payments. You can do one by one by completing, or you can do simultaneously. So now the total payment for the month of May is 74,000, June is 1,32,000, and July is 65,000. So closing balance is equal to total receipts minus total payments. You have total receipts here and total payment here. So total receipt 81,800 minus 74,000, which is 7,800. As I told you, this month closing balance will be the opening balance to the next month. So the opening balance of June is 7,800. So 7,800 plus 64,000 is 71,800. So 71,800 minus 1,32,000. So here you have a negative value. So you can mention it by putting it into a bracket. When you indicate a particular value inside a bracket, it means that it is negative. Okay. So now we are starting the July month with a shortage of 60,200. So after adding your total receipts, you will have only 21,800 in your hand, right? So if you subtract 65,000 from 21,800, you will get again a shortage of 43,200, right? So this is all. So what does we indicate? So here from this problem we found out that the company is not having adequate cash to meet out its future payments. So it is not having adequate cash to meet out its future payments. So what you have to do is you have to make necessary arrangements, so that arrangements for the additional cash token, because you have some 4 or 5 specific. See, one big specific entry payment you have, that is payment for plant 80,000, which is actually more than the sales of the past 3 months, right? So that is why we are facing a shortage. This is vocational, but when you prepare a cash budget, before in hand you make sure that are you having enough cash or adequate cash to meet out any unexpected expenses. So now you get an idea that you have a shortage. You need to make arrangement to meet this shortage. So I'll tell you the inference. As the closing balance of the last month is minus 43,200, we infer that the company's current expected payment on receipts leads to a shortage of rupees 43,200. So the company should make necessary arrangement for the additional cash requirements, right? So that's all. Thank you, students. Okay, do practice some problems so that you understand the concept very well. Thank you.